Now to finance.
F1.
Good morning. Well, Facebook shares have fallen for a second day as it deals with the fallout of the Cambridge Analytica data breach scandal. At their worst, shares were down 5% but ended trading 2.5% lower. Yesterday, Facebook shares fell 7% and are now worth about $168. US and European lawmakers are demanding an explanation of how Cambridge Analytica gained access to the data and why Facebook didn't inform its users. Some of the US's biggest retailers are calling on Donald Trump to abandon his proposed tariffs on China. Walmart, Target and Costco are among the 25 retailers that have written to Mr. Trump, urging him to reconsider. They say the tariffs targeting consumer goods, technology and telecommunications would see prices rise and American families suffer. The Trump administration is reportedly considering up to $60 billion of tariffs on Chinese imports. Well, let's take a look at global markets, and Wall Street has closed higher. The Dow Jones rose 0.5%, clawing back some of yesterday's losses. London's FTSE closed 0.25% in front. The Australian dollar is lower against a strengthening greenback. It's worth about 76.8 US cents. Oil prices have jumped up 2% and gold prices have fallen ahead of the US Federal Reserve meeting tonight. Well, for more on finance, I'm joined in the studio by investment strategist at Prime Value Asset Management, Fiona Clark. Fiona, thanks for coming in. We're in the second half of the first week of hearings for the banks at that Banking Royal Commission. Obviously, they're under a lot of scrutiny, but this would typically be a strong time for them.
That's right. The banking sector is actually down 2.6% since the Royal Commission started, compared to a market down 1%. It's a significant underperformance for such a major sector. And as you said, normally this is the period in the lead up to results in early May and then dividends in mid-May. And usually what happens is investors buy the shares in the banks so that they can take advantage of the 45-day rule, get their franking credits and their dividends if they still apply. And we're not seeing that this time. We're seeing pressure as we hear all about the issues with the consumer lending processes that the banks have had. And going ahead, we're actually going to get more. 16th of April sees round 2, where we start to focus on the wealth management industry and financial planning sector of the banks. So normally we're seeing some strength. This time, no. The question is, are they value? Is this a good time to buy? Is this the bottom? My answer there is maybe. Certainly value is appearing, but I do think some caution is warranted ahead of the round 2, because I do think that there will be continued volatility going forward.
Fiona, one company a lot of people will be watching today for their results is Myer. What can we expect? Well,
we're not expecting much. Myer has actually flagged a fairly significant fall in earnings, so we're expecting profit in the range of 37 to $41 million, which is a 35% drop on the first half last year. We're also expecting the potential for write-downs, which combined with any weakness in sales might actually put pressure on debt covenants. So we're not expecting good news, and Myer's come under a lot of pressure. Very poor sales performance over Christmas and January period. Just been taken out of the big benchmark, the ASX 200 benchmark. I'd love to tell you that I expect something positive. I'm not, but a lot of it's all in the price. So you might actually see, a bit of a rebound in terms of a relief rally if the results aren't as bad as what some people are expecting.
Fiona, the price of gold is down, the US dollar is up. Is this all in anticipation of what we'll expect tonight with the US Fed?
Absolutely. It's pretty much laid out as there for rate hike expected when we wake up tomorrow morning of 25 basis points, 95% chance. What will be in focus is a couple of things. It's a press conference and dot plot announcement, which is where all the Fed members plot where they think rates will go. So whether or not there will be continued expectation of 3 rate hikes for this year or 4, and keep in mind markets are pricing in a 38% chance that there will be that up to 4 rate hikes this year. We'll also be looking for any indication of whether protectionist activity or tax cuts will affect the outlook for the economy. So lots to watch for, even though the rate hike is pretty much a done deal.
Fiona Clark, investment strategist, thanks so much.
Pleasure.
And that is the latest in finance news.